What is going on, everybody? Welcome back to lesson number 3. Thank you so much for your patience. I know it's been a little bit of time since lesson 2, but May's a busy month. We got a bunch of birthdays. It's getting hot in Chicago. There's just a bunch of things happening, but we are back to give you all the knowledge that I know 100% for free, the way it should be. Also, congratulations to this community for surpassing 200 members. It's funny because I have created content over the past 5 or 6 years that has generated tens and tens of millions of views per month. I have amassed over 4 million followers across my social media platforms, and still just having 200 members in here on my Discord, it blew my mind when I saw that number. So thank you guys so much for being here. I know what trading has done for me in my life, so I know that you guys coming into this community looking for something to hopefully change your guys' life, it means the world to me. And for me to be able to give you all this knowledge, everything that I know for free, it's just going to give you a great place to start. And I hope at least for one of you, it can change your life the way it changed mine. I get to stay home, be with my family, be with Amanda, be with Frankie every day of the week. I don't have to worry about having a boss. Obviously, entrepreneurship is a stressful thing, but it's good stress. It's stress that I love. It's stress that I have always wanted since I was young, and it's something that it can't leave my DNA. This is the life that I love and strive for. So thank you guys again for being here. Let's get started. This lesson was originally going to be on liquidity, but I was doing some thinking and I realized you probably got to understand market structure before we get into concepts like liquidity. So what is market structure? Market structure, basically in a nutshell, is the directional state of the market at any given time, right? The market can only ever go 3 directions. It can go up, down, or sideways. It is physically unable to move in any other direction. So if you want to strip it down to its very basics, up, down, sideways. And we characterize those 3 directions as, let me write it down, uptrends, downtrends, consolidation. Okay? Up, down, sideways. Those are the 3 directions that the market can move. Okay, so when we're talking about trends, how do we identify if we are in an uptrend or a downtrend? Well, with an uptrend, you're probably thinking, well, if price is moving up, we must be in an uptrend, right? Most of the time, yes, but not always. And what I mean by that is if market opens and we just start rocketing to the upside, it doesn't technically mean that we are in an uptrend because we have to look at the bigger picture. So what's currently happening in live time doesn't always tell the full story of what's happening, whether it be in the past hour or day or week and various other different time frames. So what we have to do to identify trends is refer to our highs and lows. Okay, might seem very basic, but I'm still going through it. What is a high in the market and what is a low? Well, a high is going to be a move up followed by a move down. Mind blowing. I know. Should we go through lows? A low is a move down followed by a move up. Okay, now it seems super obvious and you're probably like, oh, okay, that was the most basic thing I've ever heard, but it's important to at least state it because we're going to refer this now into candlestick form. So let's refer back to this high right here, move up followed by move down. So in candlestick form, that is going to be a bullish candle. So in my case, a green candle followed by a bearish candle. In my case, dark gray. So let's zoom in a little bit. What would be a high? Let's look right here. This guy right here, we have a bullish candle followed by a bearish candle. So what do we have? A swing high. Where do we see a low? Bearish candle, bullish candle. That is a swing low. Okay, pretty basic, but there you go. That's what a swing high and a swing low look like in the market. So now that we actually know what a high and a low is, let's go back to trends. How do we identify a trend? So a trend is basically the relationship of all these highs and lows in a given range. So to be in an uptrend, yes, price is moving up, but technically speaking, what we have in an uptrend is a high, a low, a higher high, a higher low, a higher high, higher low, higher high, higher low, higher high, and so on. The important thing is for both the highs and the lows that each of them are higher than the previous one. So you could see this low right here is higher than the previous low. Same with this one, same with this one. Same for the highs. We have a high right here. The next high that we have is higher, 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 and there is your uptrend, okay? Downtrend, let's do it. What do we have? A low, a high, a lower low, lower high, lower low, lower high, lower low, and you get the idea, okay? So yes, you could see visually we are moving downwards or upwards, but technically our swing highs and our swing lows are behaving the way that they should in an up or a downtrend. So let's look back at this actual chart right here. And you can see this is clearly an uptrend, right? But let's mark it out. So we have a high followed by a low, followed by a higher high, followed by a higher low, higher high, higher low, higher high, higher low, and make that final high. Uptrend. Easy. Okay? That's what it looks like on a candlestick chart. Let's go to a downtrend. Here we go. We got a low, a high, a lower low, a lower high, a lower low, and there you go. There's your downtrend. Consolidation is going to look something like this right here, okay? So what you could see is we have a low, a high, sort of an equal low, a higher high, a lower low, a lower high, lower low, a higher high. You could see there's no direction here, and you could just see that visually. It's pretty obvious, but from a technical standpoint, this would be considered consolidation. Now let's go back to our drawings. Let's draw consolidation just so you could see it. It appears just to be sort of random price action, highs and lows, not forming any sort of pattern, and we are just basically going sideways. So here's your up, your down, and your sideways. These three terms right here. Now, I am going to teach one more concept in this video, but what I want you guys to do as part of your little homework, if you will, is just go on your charts and identify what type of trend are we in? What type of trend are we in? Are we in uptrends? Are we in downtrends? Go to your different time frames. Go to 3 minute, 1 minute. We're in a downtrend here, uptrend. You're gonna see, and just so you guys know for future reference, higher time frame trends are going to hold more weight, which is important to know because when we are trading, we want to be trading with the trend. The oldest saying in the book is the trend is your friend. Not many times do you want to be taking a counter trend trade. I do it from time to time, sure, but your highest quality trades are always going to be with the trend. Being able to identify that if we are in an uptrend on the 4 hour, an uptrend on the 1 hour, on the 15 minute, on the 5, all of these time frames are aligning upwards, then we are probably in some pretty good conditions to take a high quality trade to the upside. Now, I want to get into break of structure. Now that we know what uptrends, downtrends, and consolidation are, let's talk about break of structure. Okay, we are in an uptrend here, okay? We are creating higher highs and higher lows. But once we get up to this point, we get a candle closure below that previous low, okay? So let's look right here. Higher low, higher low, higher low, all the way up to here until right here. What did we do? We closed below this low, as you can see. That right there is called a break of structure. It's a candle closure, not just a wick, but a closure below the previous low. So let's go back to the charts here. Let's look back at this uptrend right here. I'm gonna zoom in so you guys can see it. Remember, we are in an uptrend, okay? Now it's clear right here on this leg that we break structure to the downside, right? It's pretty obvious. But exactly where do we break the structure? Is it this candle? No. Is it this candle? No. Not any of these candles. This candle right here is where we break the structure. Why? Because we have a low right here. This big wick right here is a low, okay? So that is going to be our swing low. And this candle closure on this bearish candle right here is where we break the structure to the downside. The candle closure is below that low. And as you can see, we absolutely shit the bed to the downside. Now, just because we break structure does not always mean that we're going to reverse in the opposite direction. There's no guarantees in the market ever, but it's usually a good indication that either A, we're going to make a reversal soon, or B, we're just getting a little more weakness in whatever trend that we're in. Let's look at another example here. Oh, this is a good one right here. Okay, let's look at this dump right here, right? Now we are in a small little downtrend, okay? However, where do we break structure? Do we break it on this candle? On this green candle right here? Do we break it? No, because this candle closure is not above these wicks right here. The body is higher than these bodies here, but it has to be the candle closure above the wicks of the previous high, which would be on this candle right here. Let me put a little line right there. So here's our swing high that we're referring to right here. You can see we did not break structure right here. Obviously not that one. This is the candle right here that we broke structure, okay? And technically speaking, the structure was broken when the candle closes, which is at this point, okay? Break of structure. As you can see, reversal back to the upside. Like I said, it's not always a guarantee that the market is going to change into that opposite direction, but it's a pretty good indication when you sort of couple it with a bunch of other confluences. So what I want you guys to do after watching this video, I already mentioned how I wanted you guys to go through and identify trends, go through any time frame. Price is fractal, so what happens on the 1 minute could happen on the 5 minute, it could happen on the 4 hour, whatever it is. Just go to any time frame you want and just start marking out your trends. It might seem like a waste of time or just whatever, but it's super important that you guys know what market structure we're actually in, so that once you learn the advanced concepts, you can decide, okay, this is a high quality trade. Our time frames are aligning both on the high time frame and the low time. I feel good about this. Boom, let's go. Also, what I want you guys to do is identify break of structure when we are in an uptrend. In this case right here, where do we break structure? Okay, if you could go through and identify that, so it's like riding a bike, then you guys are going to be way more comfortable when the market is actually moving, and you're going to be able to actually tell what direction that we are moving in. One thing I do want to mention is it might seem like incredibly basic when I'm going through these examples with you guys when they're in front of me or when you're scrolling back on all this old data, but when you are watching the market in live time, everything feels much different. And I remember when I started, it was easy to tell when I would watch videos like, oh yeah, this is that concept and this is this concept. This is an uptrend, downtrend, whatever. But then when I was watching the actual live market, I was like, okay, I don't know. Everything looks random now. So the more that you could kind of beat these into your memory and really just solidify them into your little knowledge base, the better. Trust me. Repetition is everything, even on these basic concepts. And just don't be afraid to spend time on the charts, whether it's looking back at old data or looking at the live charts. That is all I have for this video. There's no need to overcomplicate it. If you have questions, reach out to me. And finally, the next video will be liquidity, I promise. And that's when the fun starts. So thank you guys for being here. Thank you for watching. And I will see you in lesson 4. Goodbye.